Hello everyone, welcome to my YouTube channel and welcome to the daily market updates video. So today I want to talk about a very important burning question which everybody has, as is like, will the markets continue its upward momentum which is based on Nvidia fundamentals? So we will discuss the risks, we will discuss the rewards, and we will discuss the probabilities based on hard facts and technical data, and we will also discuss the macroeconomy. So without further ado, let's jump right into the analysis, and let me start with the macroeconomic update. So let's discuss the macroeconomy and the earnings. So last week we had Nvidia earnings. So that was the pivotal point in the markets where the entire trend got shifted upwards. So if you remember, prior to the earnings of Nvidia, it was falling like crazy. It was 2%, 3% down days, and that too consecutively. But everybody knew at the bottom of their heart that the fundamentals are really good. The orders are really good. The lead times are becoming shorter, and the demand for their AI chips is increasing. So fundamentally, they were guiding, very positively, and that is what they delivered. So they delivered a spectacular quarter, both in terms of revenue and in terms of net profits. They also increased their profit percentage, that is 70% plus margin, which is very high for a hardware business like Nvidia. But apparently their moat is very, very, unbreakable. Like, there are competitors like AMD and Intel, but apparently they are working on this thing since 10 to 12 years. So it's very hard to beat someone overnight. So apparently Nvidia is not facing a fierce competition from the competitors like Intel and AMD. But sure enough, they will have to catch up over the time. But for now, Nvidia is enjoying a really good monopoly in which the AI chips, for example, H100s and H200s, are really top of the line. So coming on to the fundamentals, the Nvidia fundamentals are really strong, and I don't see the earnings or net profit decline for at least 2 years moving forward. So the infrastructure game is such that the world, if you look at the infrastructure pie, Jensen Huang, who is the CEO of Nvidia, says that infrastructure is a $2 trillion market, and so far the world has only upgraded at the maximum almost 20 to 25%. So there is a lot of scope of growth for the AI companies like Nvidia, like AMD and whatnot. So that is, I don't see that decelerating or slowing in coming 5 to 6 quarters. So that's the fundamental story behind Nvidia. Now, looking at the technical advantage, they have a really good software stack on top of their hardware, and that is why people are preferring their chips, because it's very easy to run the AI algorithms, and that's very hard to beat because they have a community of developers who have been writing the CUDA library that they have. So that is one of the edge that they have in terms of competition. So this is a finance video, and why am I discussing all this? It's because it is very important to know that just because something is going extraordinarily high, people are getting a feeling of, okay, this is a balloon and this has to pop. But actually it's not like that. The growth of Nvidia right now is driven by fundamentals. So do not make a mistake of shorting just because you feel like shorting. So that's the important message that I want to give to the viewers, that you may feel that it is going like crazy, it is going parabolic, but always remember one thing: markets can stay irrational longer than you can stay solvent. So there are n number of companies in the market, so do not invest blindly. That's one key thing. So I don't see Nvidia going in a meaningful correction for the next 2 years, because it is driven by fundamentals and it is driven by heavy demand. Now what can happen is, yes, it can happen that it may have minor pullback, 5 to 10% correction, but I don't see it, I don't see a systemic risk in the company as far as this time of the recording is concerned. So we will wait and watch, and we will wait and see if the competitors like AMD and Intel comes up with a competitive chip, because remember, it's not only about the chips, it's also about the networking, and it's also about the cluster building behind the chips. So yeah, it's just a tip of the iceberg, and we will have to wait and watch, and will have to analyze the incoming data. But so far the fundamentals are strong. So that's from the Nvidia front. Next is I wanted to discuss is we had the FOMC minutes released last week. So FOMC minutes is also suggesting that the rate cuts are getting postponed and is being pushed further and further. Because the economic data is coming out stronger, because the job market right now is not giving us enough unemployment numbers. So Fed has a very little incentive to cut the rates, or even to discuss the rate cuts for the next meeting. So that's my take on the rate cut fronts. We also had Walmart reporting last week on Monday, and it seems like the consumer is still strong. The consumer is not tapping out as of now. Yes, the credit rating is getting higher. Yes, the credit card debt is also getting higher, but right now that is not resulting in the slowdown of the spending. So until that happens, the economy is strong. Until that happens, we don't see a systemic risk as of now. So that is it from the macroeconomic front. So far we are holding up very, very nicely. So far I don't see a systemic risk. Yes, there are cracks in the commercial real estate and everything, but I don't see a major sign of something breaking. So that's my take on macroeconomic analysis. One last thing that I wanted to cover is so far on the geopolitical front, we are also digesting two wars very, very nicely. So right now Russia-Ukraine war is going on. Right now also Israel and Hamas conflict is going on. We have Houthis which are creating a big trouble in the seas where the global passage of ships are going. So right now, along with all these wars, the markets are holding up pretty steadily. So I don't see a major escalation in terms of geopolitical conflict, because if we do see a major escalation, then definitely the first thing that's going to affect is the markets. So the markets being right now at all-time high, almost hovering around all-time high, suggest that all of those factors are priced in, and right now the world seems to be in control. So that's my take from the macroeconomic front. And now let us discuss the technicals, and starting the technicals from the weekly time frame, then to the daily time frame, and then I will discuss the next week's economic calendar so that you can take an informed decision. As far as weekly time frames are concerned, I wanted to discuss the important support and resistance levels. So let me go to the charts and show you what I mean. So this is the chart, and this is the weekly chart. So all the candles that you see are weekly candles. Now I wanted to emphasize on two important points. So first, let us go to the resistance levels. So if you see over here, the resistance levels is still sitting at this top of the range. I have purposefully, highlighted this area in the red because this marks as the resistance zone. So this zone is, as you can see over here, since last 3 weeks, we are trying to get above this zone, but we haven't. So keep a close eye on this resistance zone, which is sitting at almost 18,040 to 18,150 levels. So once this resistance zone is eliminated, and if we close higher, only then we can test this Fibonacci level, that is 1.272, and the ultimate area of resistance is going to be this top of the Bollinger Band that is sitting at 18,680 levels. So the immediate resistance is sitting over here in this red zone. Now one interesting and very strong indicator is the anchored VWAP, and what I like to do is to actually anchor it at the start of the year, and then I can go on from month to date and then year to date. But look at what happened this week. The reason why I want to highlight is this anchored VWAP is the white line that you see over here, and this week we exactly got supported on this white line, and then the market pushed higher. So the anchored VWAP acted as a very nice support. So this indicator is basically a combination of price and volume. So look how beautifully it had its support and then it bounced back. So this is why I try to cover a lot of anchored VWAP indicators in my videos, because this thing works. It's not that suddenly market somehow, because without any reason it got the support over here and it went on to upwards. These support zones act as a support zones because a lot of buyers are sitting over here, because everybody from institutional side and from the retail side, they place their buy orders over here because they believe in this VWAP indicator. So I will make a detailed video about why VWAP indicator is important, and what is the accuracy and everything. But just to know that the VWAP indicator holded very nicely on the weekly time frame last week, and here's the proof. So regarding the resistance zone, I have highlighted these levels. So now let us talk about the support zones. So the immediate support zone sits at the VWAP that just got holded last week, but the ultimate support zone is still sitting at this green zone, which I have highlighted over here. So the weekly time frame, just to summarize, the resistance is sitting over here in this zone, that is the immediate resistance, and the final resistance is sitting in this zone. Now when you talk about the support is sitting, the first support is sitting over here, and the ultimate support is sitting in this zone. So that's my take on the weekly time frame. And now let us analyze the daily time frame. Now let us draw our attention to the daily time frame. In the daily time frame, first let us discuss the support and resistance levels, and then let us discuss if there are any indicators that we need to specifically watch and track of. So let me open my charts. This is my charts, and as you can see over here, this is the daily chart. Now we started over here on Monday, and as you can see, we had a steady decline over here. But on Wednesday, we had FOMC meeting and we had Nvidia earnings. So I was closely watching the markets. Like if we can close below this 26-day EMA, that is this red line, and if we have a 1 or 2 confirmation days, then I was waiting to have a really nice pullback. But on the contrary, what happened was Nvidia announced a spectacular quarter, and all the hopes of the correction or a pullback were thrown out of the window. So as you can see over here, we did not have a follow through after the Wednesday's price action. And if you see this Wednesday's price action, it was actually creating a doji. Now, a doji in the technical analysis is a symbol of indecision. So as you can see over here, this doji candle signified that markets are unsure. And sure enough, next day we gapped up and we heavily rallied. So as you can see right now, the Friday's action was a very typical day 2 digestion. So after a massive rally of the Thursday, we had a digestion day, and that too an inside day. So right now, the $1 million question is, can we close above this top of the range? So this is the resistance zone. And since the markets are really propelling, driven by the Nvidia fundamentals, if we can close above this range, that is this resistance zone, then there are very high chances to go to the top of the Bollinger Band and then get rejected. So basically the daily charts looks really, really bullish. And one key thing to note over here also is you can see over here this massive update that is Thursday, accompanied with very high volume. So what do I mean over here? 746,000 contracts got traded on the single day. If you see on Friday, 651,000 contracts are getting traded each and every single day. So the liquidity is strong, the volume is strong, and if we see that if the price action is going up with stronger volumes, then definitely it is a good sign of confirmation. So I always say that there is a really good quote in the markets that the price action, in price there is knowledge, and in volume there is truth. So both have to go hand in hand in order to give a good confirmation bias. So that is exactly what we are getting right now. The only question is, in the next week, can we close above this resistance zone on the daily time frame to go higher? So that's the key thing to keep a close eye on. If we close above this resistance zone, then there is a very high chance to test this Bollinger Band. And coming on to discuss the support still sits at 5-day EMA. So there are very high chances that we take the support of this 5-day EMA. So market will test this 5-day EMA support somewhere over here and then go higher. So keep a close eye on this short-term sentiment, that is 5-day moving average, and also the anchored VWAP. So as you can see over here, I have a month-to-date anchor that is mounted over here, that is February 1, and this white line that you see over here is the month-to-date anchored VWAP. So we may test that as well, just in case if next week there is a bad economic data. So that is exactly what I'm thinking right now in terms of daily analysis. The support, the ultimate area of support is going to be this 26-day EMA. So that's going to be the main support. And that's my take on the daily time frame. These are the important levels that you need to be aware of, and thereby you can take informed decisions. But there is a heavy gap up happened not only in futures but also in the equity segment. So there are very high chances that next week we may fill the gaps and then go higher. So markets always tend to fill the gaps before it goes in any directional trend. So that is also one of the important points that I need to show you guys, so that you are aware that gaps do get filled most of the time. So there is a good probability that we may have a small pullback of, let's say, 1 or 2% and then charge higher. So that's my take on the daily time frame. Nothing spectacular or nothing unusual. All I see is just a digestion of the uptrend. And if you zoom out and if you see this rally, we are actually just getting slowly grinding higher and higher. So that's exactly what we are doing. So pretty healthy price action in terms of daily time frame. So that's my key observations from the daily levels. Now let us go and discuss the important events and the important catalyst for the next week, so that it gives you a good gist of what's going to happen next week. There is also one other thing that I wanted to tell you guys regarding the intraday updates. I'm planning to have a separate playlist and video series, because if I include intraday updates on this video, then the video becomes very long. So I don't want to waste time for the viewers who are investors and who are long-term players. This is the video for you. But if you are traders, then keep an eye on the other video, which will be specifically dedicated for intraday learnings, intraday insights, and intraday only videos. So stay tuned. And now let us jump to the next section, that is the next week's economic events. Next week we have some key fundamental drivers from the market. So let me discuss that. So we are having GDP numbers getting released next week. We will have the PCE data getting released next week, and then finally lastly on Friday we have Michigan consumer sentiment that is going to get released. So we have a lot of Fed speakers as well, who's going to speak at the mid of the week. And so the markets are relatively going to be stable next week, because we don't have a groundbreaking data that is going to get released. But the thing that we need to keep a close eye on is the economic events like Fed speakers speaking, Michigan consumer sentiment coming out, the GDP numbers which are coming out. So all in all, the reason why I am discussing all this is because be out of the position when these economic data are getting released, because you might see a volatile candle just before this data gets released. So let me go to the economic calendar, that is this. So as you can see over here, Monday is relatively very, very stable. So after the market opens, after 7 o'clock, there is no much groundbreaking news or groundbreaking catalyst for the markets. So the Monday is going to be relatively stable. Coming on to the Tuesday, we have have a lot of economic data releases pre-market, that is before 6:30 Pacific time. So after the market cash open, that is the equity open, we just have the consumer confidence that, and also the Richmond Fed manufacturing data release. So I would strongly suggest that start trading only after 7 o'clock Pacific time on Tuesday. And the important event as far as the crude oil traders are concerned, for those who are trading futures on oil, you have an important data over here, that is on 1:30, that is after market hours. So the Tuesday is also going to be relatively stable. Coming on to the Wednesday, we have important data as far as GDP is concerned. So you might know that last week we had UK and Japan went into the recession, and the data that they see to conclude if a country is in recession or not is, one of the data points is the GDP. So if you get a 2 consecutive quarters of GDP decline, then you can conclude that a country is in recession. So keep a close eye on these GDP numbers, and then you have pretty much the entire day silent apart from the Fed speaker speaking. So there are a lot of, so FOMC or the Federal Reserve has a lot of Fed governors, and they tend to give interviews to various organizations, and the markets are closely monitoring the comments from those Fed members, because those are the same members which decide the monetary policy for United States. So while these Fed speakers are speaking, it's advisable to stay out of the position, massive position. So yeah, that's pretty much it for the Wednesday. Let's go to Thursday, wherein we have the PCE data getting released. So that is going to be important, but all of those data are getting released pre-market. So pretty much entire thing will be priced in pre-market. So the main thing over here is the pending home sales on Thursday, which is going to be catalyst for the next course of action. We also have an important event, that is 15 years mortgage rate and 30 years mortgage rate, which is on 9 a.m. PST, that is Pacific time. So that is going to be crucial. So keep your positions nil before the data gets released. And then we just have another 2 Fed speakers speaking. So just be mindful on Thursday. And then on Friday, we just have one important data, that is Michigan consumer sentiment data. So after 1 hour of after the first trading hour, it is going to be safe to trade. And then again, we close the day with a lot of Fed speakers speaking. So all in all, relatively next week is going to be fairly stable and fairly favorable to take the day trades. But this is how it's gonna be, and keep a close eye and on these events, and stay out of the positions to manage your risk. And that's it for the economic calendar section. Lastly, I just want to thank you all for viewing this video, and please consider liking, sharing, and subscribing this video, because it gives us a lot of motivation, and also it gives the YouTube algorithm to give the promote this video and to share this with the needful people who actually need the genuine knowledge. And we try to share unbiased opinion based on hard facts and data. So yeah, feel free to share it with your friends, family, and yeah, thanks for watching. And as always, as I say, keep learning, keep growing, and keep trading. Thank you guys, and we'll catch you later in the next video.